In a time when the financial landscape is shifting beneath our feet, we have to ask ourselves a critical question. Are you prepared for what's coming in 2023 and beyond? Join us as we unravel the mysteries and share the insights of Andy Schectman and other experts in the field. Andy Schectman, a name synonymous with precious metals and financial wisdom, has an answer for you. He boldly proclaims, you have to be out of the system at this point if you're already not. These are not just words. These are the warning bells ringing in the ears of the financially astute. Just a week ago, the World Gold Council unveiled a report that could send shockwaves through the global financial community. Central banks, those silent giants of finance, have been on an unprecedented gold buying spree, adding 77 tons to their reservoirs in August alone. That's a staggering 38% increase compared to the previous month. China, the People's Bank of China, is leading the charge. They're accumulating gold at breakneck pace, adding 29 tons in August alone. That brings their year-to-date net purchasing to a whopping 155 tons of gold, with a grand total of 217 tons since November 2023. Their gold holdings now exceed 2,165 tons, comprising of just over 4% of their total reserves. But why are these financial giants so obsessed with gold? Why the frenzied rush to accumulate? Andy Schectman, president of Minnesota-based bullion dealer Miles Franklin Precious Metals, has a straightforward answer. They see the writing on the wall. Central banks, the world's most well-informed and well-funded investors, are stockpiling gold and silver as if their lives depend on it, with little regard for current price levels. Andy, along with a league of other gold enthusiasts, has been sounding the alarm for years. Every piece of information adds another layer to the puzzle. What are they bracing for? The answer, it seems, lies within the global banking industry, a sector teetering on the edge. Central banks are front-running an impending crisis, piling up gold and silver while most have nearly forgotten these precious assets. In a world where counterparty risks are escalating, these metals remain untouched by the volatility. Andy Schectman has been sounding the alarm about a looming financial crisis, and the signs are for those that are paying attention. He's not just talking about gold and silver, he's talking about the fragility of the entire financial system. It's something we all need to be aware of, especially with the events of 2023 unfolding. So, what are these signs of a looming crisis that have Schectman and others on high alert? One major red flag is the skyrocketing national debt. Andy Schectman has noted that in just 18 days, the U.S. added a whopping $444 billion to its debt. It took until 1975 to accumulate the first $5 billion in debt, and now we're seeing it pile up in a matter of days. The U.S. national debt has reached an astonishing figure of almost $33 trillion. Since 2001, the U.S. government has consistently incurred an annual budget deficit, necessitating the borrowing of funds to cover the resulting shortfall. This massive debt accumulation is unsustainable, and it raises serious concerns about the country's financial health. Another warning sign is the surge in mortgage rates. Schectman, along with many financial experts, have pointed out that we're seeing some of the highest mortgage rates since 2000. With rates climbing, it's becoming more expensive for people to buy homes, and this can have a ripple effect throughout the economy. If people can't afford homes, it impacts the real estate market, which in turn affects banks and more. The implications are significant. A few months ago, Lisa Chalette, the Chief Investment Officer of Morgan Stanley Wealth Management, pointed out a major challenge for commercial real estate, especially office properties. These properties have been facing increasing vacancy rates and falling values since the pandemic. And there's also a wave of loan maturities expected in 2024. This is because stricter lending standards are making it harder for property owners. Chalette also warned that the U.S. banking industry is likely to see more delinquencies and defaults. She mentioned that over 50% of the $2.9 trillion in commercial mortgages will need to be renegotiated in the next 2 years, and the interest rates are expected to rise significantly. This could lead to a sharp decline in commercial real estate prices, possibly up to 40%, which is worse than what happened during the Great Financial Crisis. What's particularly concerning is that this fallout will impact every sector of the economy, not just the landlords and banks, according to Morgan Stanley's chief analyst. This is why people like Andy, who are enthusiastic about investing in gold and silver, are advising others to do so now to avoid potential economic turmoil. The commercial real estate market is facing its own set of challenges, according to Andy Schectman. Stricter lending standards and rising vacancy rates are creating a perfect storm. More than 50% of the $2.9 trillion in commercial mortgages will need to be renegotiated in the next 24 months, when new lending rates are expected to increase by 350 to 450 basis points. It's a recipe for disaster. A potential 40% price decline in commercial real estate could have a devastating domino effect on various sectors of the economy. These indicators connect Andy Schectman's warning about the system. He's not just talking about gold and silver for the sake of selling precious metals. He's talking about the need to protect ourselves from the inevitable consequences of these financial challenges. It's about recognizing the fragility of the current system and taking steps to safeguard our wealth. As Schectman puts it, we're in the bottom of the ninth inning in a Keynesian system that has failed. The signs of a looming crisis are everywhere, and it's up to us to take them seriously and prepare accordingly. According to Andy Schectman, gold and silver aren't just investments, they're wealth. And there's a critical distinction between the two. Andy's been in the business for 33 years, and he never wavered from his commitment to acquiring gold and silver regularly. He views them as a means to protect his wealth in times of economic uncertainty. And this isn't just some newfangled idea. It's a strategy that has stood the test of time. One key idea that Andy Schectman emphasizes is the shift we're witnessing from debt-based assets to commodities and hard assets. He believes the traditional system based on debt and promises is faltering. We've seen rising national debts, volatile markets, and unprecedented challenges in the global economy. As these warning signs multiply, the lure of tangible assets like gold and silver becomes even more appealing. Unlike stocks or bonds, these precious metals don't rely on someone else's promise to hold value. And that's crucial in times of economic turbulence. Zero counterparty risk is a phrase you'll hear a lot in the world of gold and silver, and for good reason. In a time when defaults and delinquencies are on the rise, Schectman points out the importance of assets that aren't simultaneously someone else's liability. When you own gold or silver, you hold an asset that's immune to the financial troubles of others. This means that in the midst of economic storms, your wealth remains secure. In a world where trust is dwindling, the idea of zero counterparty risk is a real game changer. Now, it's essential to address the ups and downs of the precious metals market. Yes, there will be fluctuations in their prices, but Andy Schectman's perspective is clear. These aren't obstacles, they're opportunities. He sees the downs as moments when the West, in its financial myopia, effectively subsidizes those in the East to accumulate real wealth. In times of economic instability, gold and silver can act as a safe haven, a hedge against turmoil, and a long-term store of value. Now let's delve into the insights of another influential figure in the world of finance, billionaire hedge fund manager Paul Tudor Jones. While we've been discussing Andy Schectman's perspective on gold and silver, Jones brings a unique angle by examining the broader geopolitical picture. Paul Tudor Jones has had his finger on the pulse of geopolitics, and he's pointing to three key areas where he sees looming challenges. He's keeping a close eye on the Middle East, particularly the situation in Israel. Jones is also concerned about the ongoing tensions between Ukraine and Russia, and he anticipates potential trouble on the horizon. Lastly, he's sounding the alarm about the growing tensions between Taiwan and China. According to Jones, the geopolitical landscape today is one of the most threatening and challenging he's ever witnessed. In light of these geopolitical concerns, Jones believes that it's prudent to consider gold as an essential asset in today's economic and geopolitical environment. He's not just saying this to boost sales, like some might suspect. Jones is renowned for his insights, and he's known for being a shrewd investor. His view on gold isn't about driving profits, it's about safeguarding your wealth in these uncertain times. It's important to note that Jones is not a bullion dealer like Andy Schectman, who sells gold and silver. This isn't a sales pitch. It's a strategic outlook from someone with a long history of financial success. Jones's perspective offers a different angle that complements Schectman's insights. While Schectman focuses on precious metals' intrinsic value and the financial system, Jones looks at the broader global stage and the role that gold can play in uncertain geopolitical times. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well. Thanks for watching.